Right, good afternoon, everybody. Welcome to Paul's Monday Market update for 19th of February 2024. Hope you're well. Hope you've enjoyed the weekend. Hope you're ready for the week ahead. As always, just before we begin, for those of you joining us for the live session, we would appreciate if someone could just confirm that you can hear my voice and that you can see the slide, just to confirm that the technology is working. Fabulous. Thank you. Thank you very much. Okay, super. So welcome to the Monday Market Update. For those of you joining us for the first time, it literally is that it's just a 25, 30-minute race through as many pieces of instruments and information and charts as I can get to. We look at the strength and weakness within FX and indices markets, have a look at a few charts that are of interest, maybe because they've got something coming on this week or there's a learning point for us, and then we'll have a look at a live chart. As always, I just say that it is my view of the market. It is not a signal service. These aren't trade recommendations. It's just my view of what's of interest to me, which may well be of interest to yourself as well. As always, you're always very welcome here. Just remember that you are always responsible for your own trading decisions. Before we kick off, any of you in London or the surrounding area, I'll be speaking at the London Trader Show Friday, 8th of March at Novotel London West. You can get a ticket, just Google London Trader Show. But if you use the code ActiveTrade69, then you should be able to get the silver pass for free rather than £69. And everybody loves a deal, don't they? So as I said, if you're there, I'll be speaking. I think I'm on about sort of 10 o'clock in the morning, but you're very welcome. If you want to hear more, then as always, I'll be doing the Monday Market Matters webinar for Active Trades at 2 o'clock this afternoon. You're very welcome to join us today. The educational focus will be on how best to use moving averages. You can either sign up to it on the website or just take a photo of that QR code, and that will take you to the website. Okay, let's dig into our main elements. So, of course, this is the STAM. This is the kind of work that I do every weekend to give me an indication of where is the strength and where is the weakness in FX markets, and then also in indices and commodities. Because by doing so, it allows me to sort of focus my time, energy, and resources for the week ahead. Might appear a little bit overwhelming if you're new to trading or if you're new to the session, but it's kind of becomes quite easy to understand. If I just bring up the old drawing tool here. So we are into the 8th week of the year already. Okay, 19th of February. Looking at where's the strength, where's the weakness. Sterling, okay, remains top of the pile, and we go through a little bit more of that on the stage 2 call on Tuesday. We're looking at the COT data, but what we've also had is a dollar has had a kind of little bit of a jump back up there as well. All right, you can see the last couple of weeks have been a little bit volatile for dollar, and when we look at the live chart, you'll see why. But of course, after a lot of the data that we saw coming out last week, we have managed to maintain sterling strength, which is a little bit of a surprise, but we'll see how that plays out for the rest of this week. But also that kind of dollar strength has sort of shown its face again. On the flip side, yen and Aussie are still at the bottom of the pile. Kiwi dollar is also having a little bit of volatility in there, and Canadian dollar just continues to strengthen a little bit. And I think part of that is to do with an element of the strength that we've just seen in oil over the last week or so. And we'll have a little look at Canadian dollar later. If we look at what's gone on in the last 24 hours, well, actually, what we've seen is, Kiwi, all right, and Aussie have been the strongest ones. Not really much on the dollar because remember, it is President's Day in the US, and I think it's also a holiday in Canada, and of course here in the UK, some of you might well be away on things like school half terms, etc. What I'm particularly looking at is that this week we've got. I think probably the big thing is that we will have the FOMC meeting minutes on Wednesday evening. Okay, and I think that's probably the main element that people are going to be looking at to see if they can unpick any further deeper insight into Mr. Powell's thinking. Along with that, we have got Canadian CPI to tomorrow. Then we've got Aussie kind of wages on a Wednesday, and then kind of Thursday, there's a lot of the flash PMIs, all right, for Europe and also for the US as well. So, there's some good bits of data coming out. It's not as hard hitting as last week's were, but there's plenty to be going on with. When we look at the indexes, I still have S&P and Nasdaq. They're still strategic buys. Although if we look at the price action, it took a little bit of respite there. Okay, after last week's shenanigans. All right, and Nikkei still remains a kind of a strategic buy. So does Aussie. Oil has returned to being a strategic buy as well, which is something we'd been talking about a few weeks ago. And we'll look at that on the chart, and then of course also for all the sort of the crypto bros, Bitcoin is by my model is still a strategic buy, and it's also happily above 50,000. All right, so if you got in there early on it and stuff, play to it. Well done to you. So. It'll be an interesting week. I think it'll be a quiet day because of the American holidays and stuff. But what we'll start to see is, I think we'll start to see markets waking up tomorrow, and then of course into and out of those FOMC minutes. That'll be the drivers, and then people will be waiting to see if there are any particular shock numbers from the PMIs that will come out Thursday-ish. Okay, so that's the way we're going. But along with that, we also have if we look at a couple of charts of interest. And we've got NVIDIA here, and this is the weekly chart. It's been the story of 2024. You might say it's been the story of like literally, into 2023. As soon as they mentioned that they were getting involved in AI, that's just basically, you can see for yourself there that prices have rallied its way up there. But of course, this year you can see that price, it's almost going parabolic, isn't it? It's almost going, vertical there. And when I tell kind of new traders, once you see price start going absolutely vertical, if you're in it, well done. All right, just tighten up your stops a bit, because nothing can ever climb forever. If you've been sat on the sidelines, this is probably the best thing for you to do is to stay sat on the sidelines, because if you pile in, excuse me, if you pile in, normally what you'll probably end up doing is you'll probably find yourself buying the top. But we have, we've had I think it's only NVIDIA of the last of the Magnificent Seven to do their earnings, okay, and of course it's probably the most eagerly awaited, and I think it's the bellwether for the stock market, really, isn't it? NVIDIA at the moment, and I think if those numbers are good, well then I expect we continue to move. If they're a little bit higher, or rather, if those numbers are not necessarily as good as people had expected, it would not surprise me to find people sort of using that as an excuse to take profits. Okay, after such a good run so far this year. Okay, so either way, it's going to be interesting to see how that data comes out, and also to see how does the market react. How does it impact the other Magnificent Seven, and B, how does it impact markets in general? Okay, but as you can see for yourself, that has been quite some run this year. But as I said, once the price starts going vertical, its ability to carry on that is, nothing can defy gravity for too long, and that's what we'll be waiting to see tomorrow. As I said, NVIDIA was the last of kind of the Magnificent Seven to sort of to basically announce their earnings, if I'm rightly, and most of them have been okay. Most of them are right, but if you can look here, this is Google here, and kind of an indication that their numbers were perhaps. They weren't bad. They just weren't as great as everybody was hoping, and that had an impact there. And we can see that this is the weekly chart, and we had in the way of into this year, we'd run up into those kind of recent all-time sort of highs that we had seen, latter half of 2022. It's certainly been a great run from this kind of some people would call that triple bottom. All right, so some people might even just try and label it as an inverse head and shoulders, but however you wish to label it, clearly it had been on a good trend. But interesting to me is that we'd got to the recent highs, which I'm always interested in, and we printed a really bearish engulfing candle there, really bearish key reversal, okay, in terms of price pushing to a new high and then rolling over and closing beneath the low of the previous candle, and we can see the price action there hasn't exactly sort of followed suit on that. So my view would be on that, I'd be looking for that to drift its way down to the sort of to the 20, and then decide. Certainly 20 has acted as pretty good significant out, okay, support, all right, for the last few months. If it continues to do that, well, then it pushes back up. But if that breaks, well, then you start to see a sort of kind of heading back down to the 50, down to sort of like 125 area, 130 area. That's what I'll be looking at with on Google there. So even though all these Magnificent Seven have, they have been the let's say the market darlings, and the price action isn't exactly all sort of happiness and light. Talking about companies that are not all happiness and light, well, I could say you do get happiness and light if you're flying on a Boeing and the door blows out, you'll get lots of happiness and light, and probably a lot of wind and the opportunity to be sucked out. But anyway, less about their manufacturing quality. But they're perennial favourite of ours, aren't they? Really, well, mine. Sort of Boeing. Here we go. Weekly chart. They had appeared to what they have done is effectively as climbed their way out of the mire of that they've been in for years now. And that was all going very well until basically, as I said, they started having, I think, Alaskan Airlines. They found, was it bolts missing, or and then of course one of them had their doors blow out, and there's been lots of other engineering problems occurring with that. And you can see from being where we were just tickling the soft underbelly, all right, towards 270, price really did collapse there, and prices collapsed back down to big round number at 200. And kind of what we'd be interested in is that if you look at that, the last couple of weeks have been they're just inside bars. We've had at least two inside bars. Kind of I'll be interested to see how it opens when it reopens. We'll open today, but I think it's only open for a couple of hours today. It'll be more like tomorrow. So it's a case of it's squeezing here just above 200. That's the way I'd look at it. And then you've got to be asking yourself, is all right, okay, is that squeezing because basically they're expecting sort of some good news that will give it that will provide the support at 200 before it rallies higher, or is it squeezing before it actually breaks and heads down towards 180 there? So it's getting ready to do something. Remember what I always say is that you've got a big round number, you've got price squeezing, you're in between the moving averages. All right, when price and the averages and big levels are all in the same place, it's kind of it's the squeeze before it makes its next move. And so you want to be just watch and see how that particularly plays out. Sometimes it's very clear which way it's playing out, otherwise it's not. My view would be it's not necessarily clear to me whether this could blow to the north or to the south. So when that happens, I just wait and watch, okay, and let the market play its hand, and then I'm happy to follow it afterwards. So whilst Boeing may not necessarily be having the greatest time share price wise, if we look at another sort of defense company, which we haven't looked at again for a few weeks. No, well, it might be a couple of months even, a bit closer to home. British Aerospace, British waste of space. They might well have, it used to be known, not so much these days, not so much here since then. What happened then? Well, that's kind of Feb 22, isn't it? So that's when the Ukraine war kind of blew up, and you can see, well, it literally and figuratively blew up, as did the British Aerospace share price. Okay, and you can see there from where we were kind of trading around about 650, kind of almost getting towards doubling that. All right, in these 2 years. So Frankie Goes to Hollywood might have sung that, war, what is it good for? Absolutely nothing. But what they didn't have there in the lyrics was, absolutely nothing except in case you are a British Aerospace shareholder, in which case it has been very good for you. So that is what we are seeing there, okay? And, that's a weekly chart, okay, doing its thing, to new traders. I just try and tell them that, good trends leap off the chart. And when there is a very good trend leaping off the chart, don't fight it. Try and find a way to join it. And what we have seen is not only have there been breakouts, but there have been kind of all sorts of variations of bull flags there. Okay, that have occurred as over this last sort of year, 18 months, as price has just ground its way higher and higher. And the thing I'll be looking at is price is going really, really well there, isn't it? Price is going really well. But once we start pulling really far away, okay, from the moving averages, you start to think about it getting a little overextended, and people looking for a reason to take profit. So it has not gone. I wouldn't claim this price to have gone vertical, like you might say about the NVIDIA share price. but clearly it is, it's in a very, very strong dominant bull trend. But once you start to pull away from the averages, you start to get a little bit stretched, and that's when it doesn't take much for it to sort of snap back there. But as I said, that's been a great trend. Okay, war has been very good for British aerospace. Who'd have guessed, and stuff. And so you might want to just watch to see how that plays out over the next couple of weeks. Okay, so there you go. A few charts of interest as always. Just you might want to add to your watch list. So let's switch across to the live chart to see what's been going on. So just bear with me one moment, and we'll switch across there. Just bear with us 1 second. Let's bring these up. Okay, so here we are, sort of indices chart. I hope you can still hear me. Hope you can hear me. I hope you can see the charts now. So this is just a mix of some of the indices. So we've got Dow, Nasdaq, S&P, Russell, FTSE, Nikkei, DAX, and oil. Okay, so everything's been hunky dory. Everybody's been very, very happy. But weekly Dow. Okay, last week that is a some people would call that, a doji. Some people would call it a high wave candle. Some people would call it, you could find some people would call it a rejection candle. I would look at that as that is a broadening formation that is basically there's a bit of indecision there, isn't there? That's the way I would look at it. Yes, we did push the highs, but we fell away, and then we couldn't push back to those highs towards the end of the week. So the daily chart is still you'd say that still there's a bullish trend intact there. The 20s acted as nice support there, but on a weekly basis, it's not. It looks to me like a little bit of indecision. There's a little bit of taking a breather, and then you might consider that when you look at for example, the SP 500. Now, some people would look at that as like a momentum pin bar. It's we're in a strong trend. It's just a little bit of a pullback, and it's getting ready to go. Other people might consider that something like a hanging man, all right, which is normally a bit of a reversal pattern. Once again, I'd look at it as it's broadened, all right. If you look at the highs and the lows there, okay, they have been taken out. They got taken out last week there, and then we just pulled back into it. All right. So, my view would be as long as we sit above 5,000, we're bullish. But, if we start to get beneath it, well, then, if you're beneath 5,000, beneath the 20, then you're looking at the 50. So I will look to see how that plays out this weekend. And as I was just saying, NVIDIA is a bit pretty much become almost like the stock market in its entirety. All right. So good news for NVIDIA will be good news for the markets. Bad news for NVIDIA will probably be, a case of profit taking as well, especially with the data that we had out last week, none of which, well, in fact, I think that it all put to bed any hope of a March interest rate cut, and actually, even May might be looking a little bit ambitious at the moment. Okay, so let's see or wait and see. But that had all its impact there. Okay, even Nasdaq there. Okay, so just having pushed up nicely. You can see, it just kind of, he might be saying that actually double topped and there's a lower high with a bearish key reversal there. Okay, that I wouldn't exactly say that's bullish. That doesn't necessarily mean that the market's done is about to reverse, but what we might see is a bit of profit taking back down towards that 50. I'd say, that's what I'd be looking at as a plausible scenario. The Russell is the Russell. The Russell's doing it, whereas the other three kind of are working in unison. The Russell is pretty much marching to the beat of its own drum. All I'd say is it is back up above 2,000, but even that weekly candle for last week, that's still a lot of, there's indecision there, isn't there? That's not exactly, I wouldn't exactly say that is, sort of, bullish heaven, so to speak. It might be above 2,000, it might be above the 50, but it's, I wouldn't necessarily say that looks to me like it's getting ready to move, strongly north from there, but we'll wait and see. Looking at, let's say, some of the bullish ones, Nikkei continues to be Nikkei, and we saw the kind of the consolidation before it broke out at the start of the year, and it's still continued to push, and is helped by the fact that, as we saw from the STAM, yen just remains firmly wedded to the bottom of the pile. Okay, in terms of weakness, the DAX, interestingly, it pushed to highs again. All right, it did push to highs again, but it's a bullish close, but I wouldn't exactly say it's it's a really strong bullish close, okay? And in fact, what we saw is basically, Friday we pushed up there, but we closed back down beneath it. Some people might be looking at that as maybe a bit of a false breakout of the all-time high. Once again, a bit like the others, it wouldn't surprise me if there was a bit of profit taking back down to the 50. I wouldn't be shocked by that if that's the way we worked to begin with. All right, from that, FTSE, 1 week we're producing really nice bearish engulfing key reversal candles off the 50 MAB, and then the next week buying, you can see how it shoots the other way, and it's just, if you just look at those weeks for this year, all right, that doesn't exactly fill you with any kind of real confidence. That doesn't really, I would say, give you any real clever bias that you can see there. It's pretty, it's all over the place there. Okay, it makes it very hard to sort of to call it or to trade it. And where we are seeing is oil. Okay, remember we talked about this a few weeks ago about how on the weekly chart here, the 200 was acting as support, wasn't it? Lots of rejection candles there. We popped our way up. We had a week of getting battered back, and then we worked our way up, and then last week we carried on, and we're now above the 20 and the 50 there. Okay, that's bullish. I see that as all being kind of bullish there. Okay, and you might say, some people might say that if I go down to the daily chart, some people might say, well, actually, Paul, that is just a very scruffy cup and handle, and actually what we'd be looking for is like any cup and handle, a breakout of that, maybe back up to that kind of $85 mark and stuff. So, that people who trade cup and handles might say that. I don't trade cup and handles, so I'm happy just to have a bullish bias and look for ways to take advantage of that when it comes my way. Looking at a couple of the other commodities, gold. As I've said a bit, if we look at the last few weeks, okay, there's not really any clarity I see there. Interestingly, last week we did push beneath 2,000, but we did close back above 2,000. It looks better on the daily chart there in terms of actually, you can see we pushed down and then we reversed pretty much quickly back up above that 2,000. Look at that on the 4-hour chart. There you go. So once again, some people might be saying, well, Paul, isn't that a kind of a cup and handle forming there? That that's what we're looking at, which would be for a bullish move. And I wouldn't necessarily fight you on that. But for me, you'd need to be getting above these 200 on the 4-hour for me to sort of have a longer term kind of bullish bias on that. Talking about bouncing off big numbers, silver, all right, did the same. So I talked about how my system was giving me, my models were giving me kind of a strategic short signals for the silver, but I wasn't said I'd said I wasn't buying it until we got break and close beneath 22, and that has not happened. And actually last week, we came down to 22 and we bounced off it very strongly. And in the 4-hour chart, not massively dissimilar to gold in that we went down to the big number, went underneath it, and then we came back up it. And in fact, maybe you might say silver's a little bit ahead of where gold is at the moment, but that's what we're looking at. $22 remains a pretty strong level there. As I said, Bitcoin, this was the move here. This move into the gap there, and the bounce back up from there from 38,000 to 52. Great move if you've been part of that. Fair play to you, well done and stuff. That's been moved. I would now be looking at 50,000 flipping from being resistance to support. That's what I want to see on that. Okay, so that's indices, commodities done. Let's have a little look at. We'll have a look at dollar. Canadian and dollar and sterling. Okay, we normally always finish on sterling here. Okay, so always looking at the dollar. Okay, what it's doing is dollar index weekly chart. We've had a great uptrend from the end of last year all the way up. The week before last, we talked about how we'd had a bit of a pin bar here at the sort of kind of the 20, and what we would be looking about is a look at last week's price. If we look at last week's price action, that is once again, some people would call that spinning top, some people would call it a doji, some people would call it high wave candle. Either way, it's that broadening formation. Okay, I suspect lots of orders getting cleared out, and maybe now we'll get a true direction. Okay, if I look on the daily chart. We talked about how we'd had this nice move up. It was almost like a descending triangle at the end of an uptrend, and you can see we popped beneath it and then pushed our way back up and then came back to this level. And this kind of 104 here, 104 sort of seems to be hanging around as kind of a level of support, all right? And I'd be wanting to see, I don't expect much in the way of move today, but maybe from tomorrow, especially after minutes on Wednesday night, to see, does that give us a bit of are we going to get another step move in the dollar? So with that in mind, then you're looking at, well, how's that playing out elsewhere against the euro dollar? We talked about it being a nice downtrend, pulled back up here into a bear flag, and it broke it very nicely, but it's come back to retest it, hasn't it? That kind of come back to retest it. There's kind of a little bit of euro strength there, right? Whether that's people just taking profit on dollar more so than people, getting excited about euro, that's where I'd probably maybe look at that. But if we look at dollar against Swiss franc, what we had to have, is Swiss franc has been weakening across all the board, and dollar strengthening. And last week, what we did, we've got up and we've tapped that 50 again. And look what's happened the last few times we've tapped the 50. It's bounced off it beautifully. So I'll be looking to see how does that price action play out this week. Does it basically, it's also there daily 200? Does it roll its way down and come back at least to the 20? Canadian, we're going to look at in a moment anyway. And the others are, they're a little bit scrappy. Dollar against Japanese yen. You'd heard we talked about it since the sort of kind of start of the year. Once we've got this really big, strong bullish weekly candle saying that it's likely to drift its way to 150, and hey presto, that's what we've done over the last week or so, just drifted our way up there. And now we're looking to see once again, how's it going to act? Back here, of course, 150, was deemed to be, a kind of all sorts of places in terms of, the great resistance there, and you can see how it dropped away from there. The question is that going to show up again? Okay, is there going to be resistance? Will the Japanese do anything, or are they just washing the hands of the lot of it? So that was dollar. Let's have a little look at Canadian dollar. So here we go, dollar against US dollar against Canadian dollar. We've had that dollar strength, but there's a lot of rejection candles there, isn't it? And last week was the same as well. When we're not closing above the weekly 50, we're not closing above the 20. There's actually been rejection there, okay? And you wonder if is that going to be basically a little bit of Canadian dollar strength, dollar weakness coming into the play, in which case we would drift our way down, all right? And so, what we might be looking at that is to see, well, could that be played out based on the fact that we've got Canadian CPI tomorrow, and also we've got, as I said, FOMC meeting minutes there. Okay, is that a case of that's going to roll its way over and drift its way off those highs there? No shock that Canadian dollar, is strengthening against Japanese yen and is making new highs. These are not normally the charts, these ones, but you can see for yourself. We've already through 2022's highs, went through 2023's highs last week. We closed above that. Okay, that's just that's a reflection of that yen weakness, Canadian dollar strength that you can see there. And so you'd be looking. I'm always fascinated to see how does price react once it gets to those particular areas, those levels. All right, how does it just make a base and continue on? Or does the price action completely roll over there? I'd say that's still pretty strong bullish price action there. What we've also seen is Canadian dollar against Swiss franc weekly chart. The Swiss franc, remember, has been absolutely since the summer, really super strong, top of the STAM. But you can see here there's a fabulous pin bar off the 50, which became an evening star. Nice weekly rundown for the rest of the year. But even that, over the last 2 months or so, we've had basically a bit of Swiss franc weakness, Canadian dollar strength there, okay, and that continues there. And it's just that reflection of Swiss weakening across the board and Canadian strength, and this is how we've seen Canada sort of shift its way into third place. I don't want to overrun too much, so let's go quickly to sterling. All right, so it's probably sterling this morning. It's a bit of a quiet morning this morning on sterling. Nothing really terribly exciting to get excited about, but if we look at it on the sort of the higher time frames for this, well, what we can see is we'll start with cable. Now, we talked about, last Monday I talked about how, we've been pivoting around 127, all right, for pretty much the last few months. We pushed down here, and normally that would be a very nice kind of, pin bar off the 50 was only because we were running into so much UK and US news last week that, we're howling fire on that. And as you can see, with the more of an indecision, there's an awful lot of, indecision candles we've seen there across all asset classes, aren't there? That's what we're seeing there. There's nothing really, nothing really sort of telling us one way or t'other. Yep, we're beneath the daily 50, but we're squeezed between the daily 50 and the daily 200, okay? And I don't think we've really, having pivoted around 127 for so long, we've not really, I don't think as of yet we've kind of sort of set some kind of new trend there. I don't particularly see that. Pound against yen, all right, a bit like CAD against yen, pushing to highs, okay, above the 23 highs, above the 22 highs there, pushing up there, okay, not a massive shock. Sterling is strong, yen is weak, okay, so, you can just see how we've just sort of ground our way up there, all right, and we actually pulled back into it. Normally you'd be expecting price to, it flipped at recent highs. Is it going to basically push to new highs? That's what you'd be expecting to see. If we look at euro sterling, euro sterling, there's a lot of indecision there, isn't there? I would say, okay. We did get to, I'd always said I thought we'd get to 85, all right, and then it looked like it didn't want it. But then, last week we did push our way down there, and it was, as you can see here, we pushed our way down it and then printed a bullish engulfing candle off that big number, right? So I'm going to be interested to see, do we push up, come down, make a higher low? And then as a higher low, is there a run towards the 50 and then above the 50? That's what my scenario would be for euro sterling. That pound against Swiss, in terms of, remember, we just looked at Canadian dollar strengthening against the Swiss. We've also got the pound strengthening against the Swiss, and we're back up to the weekly 50 and the 111 level, which had been so significant for so long. You can see it closed beneath it last week. Okay, got up to it but closed actually beneath it, and now I'd be saying, well, if for it to continue, I'd want to see it weekly close above the 50 and hold and base above it. That's what I'd like, a rally-based rally. That's what you'd be looking for from that. Okay, there you go, ladies and gentlemen. I appreciate I overran a little bit, but there's always plenty to talk about. As I said, I appreciate it's a little bit of a race through. I'm just trying to sort of share with you as much as I possibly can in the time we have together. I hope you found that useful. I hope that's given you just a little bit of insight into what's going on. As I said, there's going to be some interesting news later on this week, so make sure that you keep your powder dry and that you're managing risk accordingly. For those of you on the VTP, stage 1 call will be tonight, stage 2 call will be tomorrow. For the rest of you, I hope you have a fabulous trading week, ladies and gentlemen, and I look forward to speaking to you soon. Take care, everybody, and trade well. Cheers.